Elon Musk just sent a major message to Tesla employees and shareholders. Is this a sign of confidence or a red flag? Tesla's stock has been in freefall, and this isn't just another routine dip. Sales are slipping, analyst downgrades are piling up, and Wall Street is turning its back on the company. But what most investors haven't realized yet is that Musk's statement could mean something much bigger for Tesla's future. We'll break down what he said later in the video. But before we get into that, let's talk about what's really driving this sell-off and why analysts are now calling Tesla a broken growth story. Tesla's stock has plunged over 30% in 2025, erasing billions in market value. This isn't just because of the broader market downturn. Tesla itself is facing a unique set of challenges that are making investors nervous. RBC just slashed its Tesla rating, warning that weakening EV demand and rising competition are a major threat. Tesla now has one of its lowest price targets in history. Analysts at Benzinga report that multiple firms, including Morgan Stanley, are dropping their bullish stance on Tesla, slashing their price targets by $20. One analyst even set a $120 target, implying that Tesla could still fall another 40% from current levels if demand continues to weaken. Right now, Wall Street is overwhelmingly bearish. U.S. sales have started to weaken, which is a major red flag since Tesla relies on North America for profitability. Tesla's market share is declining for the first time in years, as brands like Rivian and Ford's EV division take more of the U.S. market. Germany, Tesla's sales have dropped a staggering 76%. European customers are shifting to homegrown brands like Volkswagen and Mercedes, both of which have rapidly expanded their EV lineups. China, the biggest battleground. Tesla is losing ground to BYD and Xpeng, both of which are launching cheaper, high-tech EVs with superior battery efficiency. Competitor threats. BYD has just unveiled a new fast-charging battery technology, allowing for a full charge in just 5 minutes. This could be a game-changer and a huge competitive risk for Tesla. This isn't just a rough quarter, it's a structural shift that has Wall Street questioning whether Tesla's days of dominating the EV market are over. Now, despite all of this, Elon Musk is telling investors to hold on. What does he know that the rest of the market doesn't? And is there still a reason to believe in Tesla's long-term potential? We'll dive into that next, including the shocking warning from Wall Street that could spell even more trouble for Tesla's stock. If there's one thing that's keeping Tesla investors up at night, it's this. Is Tesla still a high-growth company, or has it entered its slow decline? For years, Tesla was untouchable. It wasn't just another car company, it was a tech stock, an AI stock, a robotics play, and the leader in EV innovation. That's why it commanded massive valuation premiums. But now, Wall Street is shifting its view. More analysts are treating Tesla like a traditional automaker rather than a high-growth tech stock. Here's the big problem. If Tesla is valued like a traditional automaker, it means its stock still has much further to fall. Legacy automakers like Ford and GM trade at a price-to-earnings PE ratio of around 6 to 10. Tesla, even after its decline, is still sitting at a PE of over 100. That means Wall Street could continue pushing Tesla lower until it reaches a valuation that aligns with shrinking growth expectations. Now, this doesn't mean Tesla is done for, but it does mean that the market is fundamentally rethinking what Tesla is worth. But Elon Musk isn't backing down. In fact, he just gave one of his biggest messages of the year to rally his investors and employees. So what did he say? And does it actually mean anything for the stock? Let's break it down. Musk recently held a massive all-hands meeting at Tesla, and what he said has major implications for investors. First, let's talk about the main message. It was, do not sell your shares. Musk told Tesla employees that he still believes in the company's long-term potential, and he specifically urged them to hold on to their stock options instead of selling during the current downturn. This isn't the first time Musk has made a statement like this, but it comes at a critical moment. With Tesla stock at its lowest in years, Wall Street turning bearish, and competition ramping up. So is this just damage control? Or does Musk actually know something the market doesn't? Here's what stood out from the meeting. Musk doubled down on Tesla's future in AI and robotics, stating that full self-driving and Optimus, Tesla's humanoid robot, will be the real drivers of long-term value. He acknowledged that Tesla is facing short-term turbulence, but he insisted that the company will emerge stronger. Musk is clearly trying to keep investors engaged, even as Tesla struggles. But will it work? Historically, Musk's words have been able to boost Tesla's stock, but with Wall Street growing skeptical and competitors closing in, it's going to take more than just promises to turn things around. So what's the real catalyst that could make or break Tesla's future? That answer might lie in the political and legal battles Tesla is now facing. Yes, Tesla is caught in a political and legal firestorm that could have massive implications for investors. Let's start with the vandalism and showroom attacks. In recent weeks, Tesla dealerships and showrooms across the US and Europe have been targeted by protesters. Some have been vandalized, while others have seen demonstrations right outside their doors. This backlash is directly tied to Elon Musk's increasingly political stance, with critics accusing him of turning Tesla into a divisive brand. But the situation escalated when Donald Trump stepped in. Trump has now issued a stern warning that anyone sabotaging Tesla could face up to 20 years in prison. He's pushing for tougher penalties, calling these acts domestic terrorism. This has put Tesla in a unique and highly volatile situation. It's no longer just a car company, it's now part of a major political battle. Some investors may see Trump's backing as a good sign, but it could also further alienate Tesla's core EV buyers who have historically leaned progressive. If Tesla's brand remains this polarized, it could accelerate customer defections to competitors like Rivian, Lucid, and BYD. These protests aren't just symbolic, they're having real consequences for Tesla's business. Tesla's European sales are plummeting, and showroom protests in Germany and France have intensified. Major institutional investors are questioning whether Musk's political involvement is hurting shareholder value. And if that wasn't enough, Tesla is now facing a new legal challenge in Canada. The Canadian government is considering imposing new tariffs on Tesla vehicles in retaliation for U.S. trade policies under Trump. If this happens, Tesla's sales in Canada, one of its key international markets, could take a major hit. Between the regulatory hurdles, trade disputes, and an increasingly polarized customer base, Tesla is facing challenges far beyond just selling cars. And that brings us to another major question. What exactly is Musk's long-term vision for Tesla? Because while all of this is happening, he's teasing another master plan. But there's just one problem. Tesla's master plan Part 4. But what happened to Part 2? While Tesla's stock is facing mounting pressure from protests, analyst downgrades, and legal uncertainties, Elon Musk is once again shifting the conversation, this time by teasing a new master plan, Part 4. But there's just one issue. Many investors are still waiting for him to deliver on Master Plan Part 2. Musk first introduced the concept of Tesla's master plans as a way to outline the company's long-term vision. The first two plans, dating back to 2006 and 2016, promised everything from affordable mass-market EVs to self-driving capabilities. And while Tesla has achieved some of these goals, others, like fully autonomous driving and the robotaxi network, remain unfinished. Then came Master Plan Part 3, which Musk revealed in 2023, focusing on a global shift to sustainable energy, massive scaling of EV production, and Tesla's role in energy storage. But even that plan has left investors with more questions than answers, as many of its ambitious targets still feel far out of reach. So now that Musk is teasing Master Plan Part 4, investors are wondering, will this be the plan that actually delivers, or is it just another distraction? There's already skepticism brewing. Tesla's full self-driving, FSD, ambitions are still facing regulatory and technical roadblocks. The company's vehicle lineup is behind schedule, with delays on new models. Tesla's energy business, including Megapacks, has yet to become a significant revenue driver. Musk's timing is also raising eyebrows. With Tesla stock struggling, some analysts believe this master plan tease is simply a way to keep investors engaged while the company works through its current challenges. So, is this next master plan going to be the blueprint that takes Tesla to the next level, or is it another case of overpromising and under-delivering? Right now, Tesla's stock is at a crossroads. The company is still a leader in the EV space, but with increasing competition, growing political backlash, and mounting investor skepticism, it's clear that things aren't as smooth as they once were. If Musk can successfully execute on his vision and address some of the key issues holding Tesla back, the stock could recover. But if these promises don't translate into real results, Tesla could face even greater pressure from Wall Street. What do you think? Is this just another distraction, or does Tesla have a real plan to turn things around? Drop your thoughts in the comments, and don't forget to like, subscribe, and turn on notifications so you never miss an update on Tesla's stock and future.